All right, Tim Quast, how we doing today? Happy Monday. I know I had a case of the Mondays this morning, so I need you to wake me up. What's going on in the market? What's market structure showing us? And how are things going? We also got option expiration this week.
We do. Happy Monday, guys. Good to see you guys.
How
Uh,
we doing?
I and it was such a lovely weekend here in Denver. I actually got some sun.
Ooh, nice. Yep.
Yeah, out in the sun. It was beautiful. It was a great escape from geopolitics to be out in the beautiful autumn
I
Colorado
miss the
weather.
nature. I miss the nature life. I do.
To answer that first, your last question, yes,
Mhm.
options expire this week, and it
Mm.
tends to in these um, not every time, but generally, earnings coincide with options expirations, and it's an important thing to keep in mind if you're a trader that you can misinterpret what the market is telling you because of the things that can occur around options expirations. And it's close to right now technically the way we measure it, not that we want to be guilty of false precision, but about 18.6% of market cap rests on renewing options as we go into this series. That's Wednesday, Thursday, Friday. It's not one day, it's really three, and then new options trade next Monday. So you have to think about it as a really a 5-day event because you want to get past those things. So if you're a trader, beware that things may not work the way you expect. You could see a company report great results and decline, drop sharply, and sometimes it's nothing more than the way derivatives bets reset. I mean, if you're wrong and you let go your whole basket, down goes the price, and it doesn't make any sense logically. So people have to beware of those things.
Let's take a look at market structure, Eds. Let's take a look at what the market is showing. Have we peaked on demand? Is short supply increasing here? I know I want to see the graphs. Let's take a look underneath the hood, get into Market Structure Edge. And you guys out there, if you guys want to go ahead and check out Market Structure Edge for yourself, like always, you guys can check it out. Get all the way up to a month's trial. Here you guys have the link. Let's take a look at it.
Okay. So, well, I would like to highlight two things that I think are important to understand if you're an active trader. And for those who are new to Market Structure Edge, this is all about the rules and the mechanics of the market. That's what it is. Not technical. It's not fundamental. It's looking at supply and demand. It's the principle underlying everything. It's the principle behind the surge in interest rates. The Fed has sold $800 billion worth of securities over the last year. And I'm thinking, Dennis, I don't know if you think about this, but what a colossal loss that would be from a paper standpoint
Can you
in that
imagine?
portfolio. I just cannot imagine. And
Did
they
they
don't,
mark
because
them to market?
I, I don't know, because the Fed does not present financials under generally accepted accounting principles. So we don't know, right? But to lead into supply and demand in the equity market, two things to look at. And we fully expected a surge for equities because of this. Zooming in, this gray part of the graph here is SPY. So it's a proxy for the S&P 500. The green part of the graph that's not nearly as volatile, that's an algorithm that tells us about buying and selling by investors and traders. And when it peaks and begins to decline, the market tends to fall. When it bottoms and begins to rise, the market tends to rise. It can be interrupted by options expirations. That's why it's good to know. Well, here's where we were a Monday ago, right? Maybe it was two Mondays ago. I think it was 2 Mondays ago. And I was talking about how, well, I think you want to be in tech because we could look at how tech was recovering. The broad market had gotten below that green line. So it's just a quantitative measure, but there's a very high probability that stocks rise off of that. That's what you want to do. You want to capture gains and avoid losses. That's how you outperform the market, by trading the same things that everybody else owns. But if you can capture the gains and avoid the losses, you will outperform. And that's what we're trying to do. So here's where it is now. It's barely back above the green line. It's not above 5.0, the bare nexus of supply and demand. It has been helped by a decline on the supply side, but it's still 50% short. So I look at this and say, there's a high probability that the demand side peaks right into options expirations. It did that back here in September, right before options expirations. And remember, back here, Tesla went from 235 to 276, right into that. But then it plunged again, right? So it's very important to know what the supply demand equation is so that you protect yourself, traders. So I look at this and say, that's the risk, Mitch. It's that we peak once again, maybe very weakly, into options expirations and the supply side reverses. Now, I don't know what it's going to do. Maybe it continues to fall. It stopped falling on Friday, though. And let me show you one other thing. You can interrupt me at any point.
No,
But
by all means.
let's look at SPY. So SPY is that price proxy. Let's look at the supply and demand in SPY. And here is why tech faltered. Tech is a very important part of the S&P 500. The SPY simply tracks it at half the volatility of the average stock. Well, demand is good. It's right at 5. That's where you expect SPY to be. SPY should spend a lot of time at 5. When it drops below 5, be very careful. But look what happened on the supply side. We went from 46% short, which is very low for SPY because it's a long-term trade. I trade leveraged long and short S&P 500 instruments, and it's going to show up. But look at that. We went from 46 to 61% short in 1 week, and look what it did to the price. So this to me is, and there's a high inverse correlation between supply and SPY's price, like almost 99%.
Tim, do you think this is off the backs of option expiration or more the uncertainty in the macro environment with kind of the geopolitical events?
I think it's more about earnings, Beth. You know, the problem with the market is that it's 98% algorithmic, maybe even a little higher than that, Dennis. Those are the, I take those figures from what the exchanges tell us about the use of order types. And we're right there. And if 20% of the volume is coming from asset allocation, over 50% from machines just that trade price, so there's 70% of volume isn't thinking about geopolitical risk unless that's an input in some kind of factor model. So yes, Mitch, I think it's much more about positioning to bet directionally around earnings. But what would this tell you? You'd look at this and say, because there's high expectation for Q3 earnings, that it could be record S&P 500 earnings. I don't know what it's going to be, but I'd look at SPY and say, people are not super bullish, and that maybe it doesn't turn out the way that we expect. So that's why you want to know those things in advance, traders. Helps you to protect yourself. Look, I don't know what's going to happen. That could reverse. But if you see that, you want to be cautious. I often avoid this period entirely because I don't like to lose money.
Well, let's go what the chat is asking for. They all want to know what's going on in momentum, what's going on in low volatility, what should we be looking at? Of course, the chat already knows this, Tim. They're like, yep, we're going in those two folders. What's going on momentum? What's showing up in low volatility?
They're not awesome. There are 5 in momentum. This is simply tell us which thing has the most recurrence. And so communication services is the top sector, but there are only 5. So it could be 2 communication services, right? So fast trading is the lead behavior. That's Citadel, Virtu, Hudson River Trading, Jane Street, Susquehanna. Those are the firms that are currently dominating the portfolios. Low volatility, 7. I like to see 20 to know that there's momentum. So you have to realize it's going to be more challenging. It's not going to be an easy trade in momentum. Look, I had I had a reasonable week last week. I only traded 2 days. I made, 1.1%. That's not awesome.
Not bad.
But it's okay, right? And I was only in the market 2 days. So from an alpha standpoint, that's very good. A risk-adjusted return of 1.1% with things flat, and I'm only in the market 2 days. That's not bad. I'll take that. But I prefer 2%. So here's what's in it. So you've got one healthcare stock, Edwards Life Sciences. You've got Vertiv, which is it's a terrific stock. I mean, it should be in your long-term portfolio, frankly. the trade desk, Roblox, Tesla. The thing to keep in mind is who's reporting earnings. If I had to pick in here right now, I would probably look at, because communication services is the leading sector, and Trade Desk is like a digital advertising platform. So I'd look at this and say, demand's very good, supply is falling. Now it's still 45%, but that to me, with the big drop on Friday, I have a chance there to make some pretty good money in TTD. Plus, it's not reporting until I think November. Whereas Tesla, as you pointed out, Dennis, Tesla's reporting this week. So realize you could get caught out. The bets are positive. I look at this and say, this steep decline on the supply side is a positive. That's an expectation Tesla's going to rise. But am I going to take that bet? I have been burned doing that. Because I can't, if maybe Dennis, you can trade outside market hours. I don't have a prime broker to do that in my trading account. And you could get chop blocked. So I would look at that and say, as good as that looks, man, I wouldn't take it. I'd still sit out.
Tim, just to clarify, I just want to get some clarity, because we always see these stocks and momentum filters. When they pop the momentum filters, though, it's showing momentum. Does this necessarily mean that these stocks are going up, though? Or does this just showing momentum? Because some of these stocks are actually, seems like momentum to the downside.
Right. Like, it's kind of 3 days. Several of these have dropped for 3 straight days. So how could you say there's momentum? There's momentum only from this standpoint. There is sharp supply-demand divergence and significant volatility. That's really what we're looking for. We're looking for things that have a probability of moving sharply more than the market. And I don't know if you can see my screen. We look for at least 3% intraday volatility in these stocks. That is, they have a propensity to move from high to low every day, 3%. I use it all the time. If AMD is in that portfolio and AMD drops 2.5%, and supply and demand are diverging, I buy it, because I have a very high, and I traded it probably 5 times in the last 2 weeks, and I made great returns, and I really don't care whether the price continues to rise. It did move from 100 to 111, right? That's a pretty nice move. And if you can capture some of that using volatility, it's a great way to think about the market. You have to realize, folks, that machines set prices, machines calibrate their risk. Which stuff is likely to rise? Which stuff is likely to fall? I want to be 50% in each so that I'm zero exposed. That's what Citadel is doing. So if we can look at how they set prices, it gives us a chance to make some part of that over a slightly longer time frame than Citadel. You can't beat Citadel, but you can be longer than Citadel. You can have a longer horizon. Maybe it's 1, 2, 3 days instead of a horizon of a day or less, or 30 milliseconds. And so this can be a great tool to help you know what to do. And I'm patient. I'll give you an example. I was impatient last week buying SPXL, a leveraged long. When the market declined, and it did several times last week, but I know that the supply demand equation is up. If it's down 1%, all of SPY's intraday volatility, the probability that before the close I can make at least half of that is very high. But if I got in too soon twice, I'm like, oh, it's down 70 basis points, and I got stopped out. It's down 80 basis points, stopped out. Down 100 basis points, I made a whole bunch of money. It was my best day. So be patient about buying volatility. If you're trading VRT with 5.5% volatility, it's better if it's down 3%. If it's down 3% and supply and demand are diverging, the probability you can produce a return is mathematically, we're always relying on math, very high. It's over 70%. So that's the kind of odds that you want on your side.
Yeah, I always say keep the math probability on your favor. You just might end up into the green. So it's always good to have you, Tim Quast, Market Structure Edge. You guys can check it out. Throw up the link one more time in the chat. Have a great week, Tim. Go enjoy it.
We will. 70s all Fahrenheit all week here in Denver. So we'll enjoy it before the snow.
Gotta enjoy it. Definitely.
All right, guys,
have a good one.